So, on behalf of the MMBA, I would like to now thank the Federal Home Loan Bank Boston of participating in this really important program. I'd like to start off by just welcoming Jennifer, Livia, and Caitlin, and maybe asking them to take a minute to just introduce themselves and just tell us what you do at the Federal Home Loan Bank Boston, and any other information you think is important.
Sure, thank you so much. So again, my name is Livia Borg. I am the Assistant Vice President and Operations Manager at the Federal Home Loan Bank of Boston, and I work in the Housing and Community Investment Department. I oversee the operations of a suite of programs that we have. My colleague Caitlin will be telling you about some of them today. I've worked in the affordable housing industry for over 30 years. Part of that time, I've worked for nonprofits, allocating agencies, National Center for Housing Management, doing training all over the country. So I've really had a really fun career. And the last 4 years, I've been at the Federal Home Loan Bank, which I love. And I'll turn it over to Jennifer.
Thank you, Livia. I'm Jennifer Coles. I'm the NPF Program Manager. I've actually been with the bank just over a couple of years, but have spent my entire career in the mortgage business, working for credit unions and banks. I actually did work for a PMI company for a short period of time. And it's just been my pleasure to come to the bank and learn more about the secondary market, but certainly how we can help the financial institutions that participate in the NPF program sell mortgages to us, get the best pricing we can possibly give them. And as we talk about affordable housing, certainly we have housing goals that we need to achieve. And so we've improved our pricing and done some things in an effort to help some of those participating financial institutions offer some better pricing to their borrowers. And I'll turn it over to Caitlin.
Thanks, Jennifer. So I'm Caitlin Mulhern, and I oversee our homeownership assistance programs. I've been with the Federal Home Loan Bank a little over 6 years. This will be my 7th year, the way we roll out our homeownership programs at the bank. And before that, I was working at a community bank in Boston in the mortgage underwriting and operations. So same with Jennifer, really just working in small community banks. And then when I joined the Federal Home Loan Bank, having that opportunity to really engage and submerge myself in affordable housing has become very important to me. And we're really excited to take the time to educate and let people know what we have to offer.
Perfect. Well, thank you. Thank you so much. So now I think I am going to unspotlight Caitlin. And am I supposed to unspotlight you, Jennifer, too?
It's up to you, Deb, whatever makes you happy.
You know what? I'll remove you just temporarily. You know what? No, because you're going to be back. So I'm going to leave you up there. All right.
All right. All right. Caitlin, can you go to the next slide, please?
Yeah.
So I think you need to switch your display, Caitlin.
Oh, thank you. Appreciate that.
That's okay.
Thanks.
There we go.
Wonderful.
And if you could, yep, there we go. Perfect. So again, I'm Livia, and I'm really excited just to kind of kick things off with the Federal Home Loan Bank today. So the Federal Home Loan Bank is part of a network of 11 regional banks that they each service a geographic area. And the Federal Home Loan Bank of Boston services the New England region. We are a cooperative, which means we are owned by our members. And the Federal Home Loan Bank has a dual mission. The first is to provide reliable wholesale funding liquidity throughout a variety of advanced products. And the second is to support home financing, affordable housing, and community development. One of the things that you should know about the Federal Home Loan Bank is that they do that support with affordable housing by giving a certain percentage of their earnings goes into the affordable housing production as well as our voluntary programs. And so next slide, please. So we have a diverse membership throughout New England, which supports smaller community lenders. We provide reliable financing that unlocks credit and home ownership, and we underpin the stability of the U.S. Financial system. So like I said, we have a whole bunch of programs. We're really excited to be telling you about them today. So first I'm going to kick it off to Jennifer to talk about the MPF program. Thank you.
Thanks, Livia. And thanks to Debbie for inviting us to participate here today. So what the MPF program does, and MPF stands for Mortgage Partnership Finance, we are there to help members of the bank that are approved as participating financial institutions to have a secondary market outlet. So those institutions can sell their mortgage loans to us. I think it's important to talk about FHA, VA, and rural housing because we just had our partners from HUD on the call. So we do purchase those government loans and they reside in our portfolio. But for those institutions that do government MBS, we offer a product for them as well. Those loans would be sold to the Federal Home Loan Bank of Chicago, and then Chicago pools them and sells them off to Ginnie Mae MBS investors. And those loans can be servicing retained. On the government MBS side, they must be servicing retained. On the other government side, where they go into our portfolio, they can be servicing retained or released. And so while those products may be a little bit more complicated to service, we do have institutions that just choose not to service those particular loans, and they would go off to specialized loan servicing, who's our partner, servicing release partner for that product. On the conventional side, we offer financial institutions the opportunity to have direct access to Fannie Mae by selling into the MPF Extra product. And then we also offer another product called MPF 35, which we'll get into a little bit more detail on. And again, those loans reside in our portfolio. Next slide, please. With MPF 35, we have a couple of different options. What we do is, for the MPF 35 product, we offer a quoted price based upon the product, the commitment horizon, the rate, and so forth. I think what's important to know here is we offer all of the low loan balance grids. So there's better pricing available for those lower loans, which also help possibly to achieve those housing goals. For MPF 35 upfront, and this is what we see most folks choosing today, is we offer a better price. So it's that quoted price for MPF 35, but we add an additional 25 basis points to it for the 30 or 20-year product, an additional 20 basis points for the 15-year fixed product. Because this is a risk-sharing product, meaning that the PFI is willing to share with us in the default, possibly if a loan does go to foreclosure, we're willing to pay you some additional income. And that income stream comes in the form of 7 basis points for the MPF 35 product for the first year, and an additional 7 basis points for a total of 14 starting in year 2. For MPF 35 upfront, in year 1, there is no additional trailing income because essentially you've received a better price up front, but we will pay an additional 7 basis points starting in month 13. Well, most financial institutions now are choosing the MPF 35 upfront product. And the reason for that is in this higher interest rate environment, if the rates go down, borrowers will refinance. And so that income stream, that trailing income will disappear. And so they're choosing better pricing now versus, maybe having a trailing income stream. Most folks in that low interest rate environment were choosing the MPF 35 product because the prepayment speeds on those lower coupon loans was particularly slow. and has remained that way. So the trailing income is really a benefit there. We figured out that if a PFI thinks that a loan will stay on, as a sold loan for 4 years, it's probably better to go with the MPF 35 upfront product. But when you're thinking about a longer, a lower rate, longer term, it's probably better to choose the MPF 35 product. And we're certainly willing to go through the exercise of working with you to choose the best product for you. Next slide, please. So what are the benefits to a participating financial institution when they decide to get into the MPF program? You benefit from your own credit expertise. So you're doing all the underwriting, processing, closing, and then you can decide to service or sell servicing released. What we do is provide you with a competitive execution for your conforming loan sales. These products do not have loan level price adjustments. That doesn't mean that you can't charge the loan level price adjustments, but it certainly isn't going to be part of the funding when you decide to sell a loan to us. I already mentioned standard underwriting and servicing processes. You can sell us government loans or conventional, and that includes the high balance conventional loans. In Massachusetts and around the 6 states that we offer this product in, there's a lot of high cost areas. And so you can sell those high balance loans into us. We provide you with support and training by Boston staff. So it's not like you're calling into some call center or whatever. We do have the support of the Federal Home Loan Bank of Chicago, who's actually the MPF provider for this program. And then again, we pay some additional income on top of the servicing income that you're earning when you service those loans. Next slide, please. So we have improved our pricing significantly right now, especially in the low loan balance area. We're really paying up on those particular loans, but we've been concentrating on the government space as well to try to buy some additional FHA, and USDA loans. There are no minimum sale requirements. And so for those participating financial institutions who are concerned about, am I going to have to sell a minimum number of loans annually to you to be able to participate? The answer there is no. Again, you can service the loans or choose to sell them servicing released. And the main website for the program is located at FHLBMPF.com. So I would encourage you to get some more information there and feel free to reach out to me if you're interested in the program or have any questions about what we've discussed here today. And now I'm going to turn it over to Caitlin.
Thank you, Jennifer. So in addition to our MPF program on the secondary market side, on the housing community investment side, we offer a suite of homeownership assistance programs. And we have 3. One of them is the Equity Builder Program, also known as EBP. And that's our oldest program that started since 2003, and it provides down payment and closing cost assistance for households with incomes at or below 80% of the HUD area median income. And then that is a regulated program. So as Livia had mentioned, that we put a certain amount of our earnings specifically to affordable housing. We take a carve out of that 10%, and 15 of it goes to our set aside, which is our Equity Builder Program. And then because in New England, especially in the state of Massachusetts, the cost of living with incomes and sales prices is extremely challenging, we have 2 voluntary programs. The second program is Housing Our Workforce, or HOW, and that started in 2019 as a 3-year commitment, and we have permanently onboarded it as an additional homeownership program. It also provides down payment and closing cost assistance, and that's for incomes above 80% and up to 120% of the area median income. And then we have our third program, which is Lift Up Home Ownership, or LU for short. And we started this program last year as a pilot, and we are adding it to an additional voluntary program to join our suite. And this is a down payment and closing cost assistance program for people of color with households at or below 80% of the area median income. This is a program that follows the parameters under the Special Purpose Credit Union program, Special Purpose Credit Program. And the way that we are able to offer this program is we have completed a very large amount of data analysis and research about special purpose credit programs. You may have heard our Vice President of HCI, Ken Willis, talk about special purpose credit programs. We have the data, and we have created a plan that our member financial institutions opt into to be able to offer this SPCP program. It is a voluntary program, and it works like EBP and HOW, with the caveat that it's specifically a people-based program in conjunction with income eligibility base. And one thing I wanted to highlight with all three of these programs, we allow conventional, fixed rate mortgages, FHA, USDA, VA, adjustable rate mortgages, as well as conforming and non-conforming. You offer it, it really just pairs with our suite of programs. So it's really just purely income eligibility based. And then the success is really in the numbers. Since EBP has been around since 2003, we have served almost 4,700 households and counting. We're well above the 58 million grants that we've dispersed throughout New England, and we have a very large membership, and the members that are allowed to access these down payment programs are specifically banks and credit unions, and we have a little over 200 members that have offered grants to their homeowners. And then the HOW program, like I said, it's been around since 2019. We've served almost 14 million disbursements to income eligible households, and we have a little over 100 members who have participated in that program. That continues to grow. Just to put a plug that we actually have already concluded our member application period for EBP and HOW, and we actually are releasing money next Monday. So all those member financial institutions who did their annual application will be able to offer both of those programs. And then for Lift Up Home Ownership, we last year in the pilot program, we served 51 households, a little over 2.5 million. And then also we had 23 members that offered these programs. And we actually just sent our announcement out about a week and a half ago. That application period opens on April 1st. So if you're a member of the Federal Home Loan Bank and you were unable to apply to offer EBP and HOW, there is an opportunity to go for Lift Up. And I wanted to put that out into the universe for today. So what's the value in our homeownership assistance grants? Number one, the name, it has grant in it. They're forgivable. They're not loans, and they can be paired with other products that are out there. And I'll get a little more into that, but there's a 5-year retention period. The home buyer can refinance as many times as they want, whether they want to do a rate and term, a cash out, or if they want to obtain a home equity line of credit. We're not lien sensitive. They can subordinate our grant as many times as they would like. If for some reason they do not stay, they do not own the property for 5 years and they want to go sell, there is a probability that there would be some money that would be repaid back to us, but a home buyer essentially would never be able to, would not have to be able to pay back the entire grant, because for every month they've lived in the home, it's a pro rata reduction. So 20% for every year, just to kind of high level. There's a lot of intricate numbers that are involved because the goal essentially is to not take back the money. We have extremely flexible requirements outside of our income eligibility parameters. We do not care about credit score. We don't perform asset tests. we have no restrictions on loan to value. You can offer what you're offering in your mortgage products paired with us. And then importantly, layering with other down payment assistance programs throughout New England, just to really increase that affordability. I specifically will highlight that, we see a lot of our buyers using the MHP1 mortgage with the subsidy. Mass Housing has a plethora of homeownership assistance programs. We see a lot of our buyers layering up with that. And even a lot of buyers last year had opportunity to be able to obtain the Mass Dreams through Mass Housing and MHP. So really just layering all these grants and knowing the fact that ours is only for 5 years and it's forgivable after that, I think are really important selling points I wanted to convey today. What can our grants be used for? Primarily they're for down payment and closing cost assistance, but to get a little granular, we do this year allow any of our homeownership programs to go toward prepaids and escrows, in addition to loan costs. And then just to get a little more detail is really anything that's on the second page of the closing disclosure is what we're constituting as closing costs. And due to the high interest rate environment, we are allowing up to 2 points of our money to be used to buy down that interest rate. Like I said, just to really further and increase that affordability. It does have to be a primary purchase in New England, and our property types range from 1 to 4 family homes, townhomes, condominiums, cooperative housing units, and manufactured housing. We get a lot of questions about the condominiums, if they have to be warrantable to Fannie Mae, and we have no stipulation on that. We do see manufactured housing more in the northern New England, but I know that modular homes are also kind of popping into the market. Our grants can be used with those. So really just kind of piggybacking on what HUD was specifically saying with their property types, that there are some commonalities here. And just really reflecting the buying power with our grant program through numbers. This is an example of a buyer that was able to have the MHP1 mortgage and then layer it with our Equity Builder grant. And they were able to reduce their loan amount and save $194 a month by being able to add our grant with the MHP1 mortgage, and they're already getting that below market rate. So really just helping that affordability and that leverage and trying to get these home buyers to be able to sustain homeownership in this environment. And then more importantly, I mean, it's lowering the front housing ratio, it's lowering the loan to value. So there's a lot of benefits of using our programs. And then primarily, being in the state of Massachusetts, we have a lot of other wonderful programs out there that only just complement what we offer at the Federal Home Loan Bank. One thing I wanted to include today while we were talking about FHA loans, you can use FHA loans, and we do see a lot of our home buyers doing that with what I know in the lending world we refer to as community seconds. There is no monthly payment, as I mentioned, for our grants. They are forgivable, and we do specifically have a deed restriction mortgage template that is complimentary when you are selling loans to FHA. And like I said, we do see a large percentage that are doing it. We see some buyers that are using that upfront mortgage insurance premium. When they're paying that at closing, our grant money is also being used to help alleviate that cost. So as I said, as we can try to evolve our programs to really fit with that interest rate environment, we have made significant changes on what our money can be used for. I don't want to get too granular into this, but you will have this comparison grid after today's presentation. But as I already had mentioned, the 3 differences for each program is really, number one, the income eligibility requirements. And when we say AMI, we're referring to the area median income. We default to the HUD income limits, and it's for all persons that live in the households. And it's not the family median income. It's if you have a household of 4 and you have 2 wage earners, 2 minors, that's constituting as a household of 4. And we have a lot more information on our website that kind of goes into detail if you're not familiar with any of our programs. And for Lift Up, because it is a people-based program, we do have a self-certification that the buyer has to select one of the options or more on our self-certification for race and ethnicity. And we do default to the HMDA definition, or BIPOC for short. And all that information can also be on our website. Our grant maximums for each home buyer do vary. For ABP, it's a little over 30,000. For the HOW program, it's 25,000 or up to 10% of the sales price. Take the lesser of the two. And then for the LOOP program, it's up to 50,000. So that is a significant contribution to, be able to have an impact in the racial homeownership wealth gap. And the differences between the 3 programs when it comes to the down payment contribution, it does have to be the home buyer's own funds. EBP, because it really is for that low to moderate income, is $500. And then the HOW program is 1.5%, because it is for a higher income bracket. And then, as I mentioned, Lift Up, we're really just trying to help bridge the gap in racial inequities. That's $1,000 for that down payment contribution. And we do see a lot of our members are using all 3 of these programs. It's not that they have to use one. I think that all of them complement each other and really just provide our banks and credit unions all the tools that they can have in their belt to be able to meet their home buyers where they are. They do have to be primary residences. We do require all first-time home buyers to complete education and counseling. And our list, we do have majority of all of the HUD educators and counselors throughout New England, and you can find our list on our website. We basically just take it from all of New England, specifically from HUD, and also for CHAPA in Massachusetts, and the National Industry Standards of Homeownership and Education and Counseling. Another best kept secret that Jennifer and I have been working together to go out to all of our financial institutions is that you can actually use our down payment assistance program with the MPF. And we like to say this is a one-stop shop for your bank or credit union. There are some differences in our programs, but if you look at the blue QR code that says MPF and DPA, you can save that, and like I said, you'll have this slide deck. We have a little bit of a grid and a matrix, if you will, that will show you the differences between MPF in conjunction with our down payment assistance programs. So that way you have everything in one suite. MPF does have a maximum loan to value of 95%. Our homeownership programs do not have any LTV restrictions, so that's one difference. And most importantly is that you can still use this for down payment and closing cost assistance, and you do have that ability to use a portion of our grant money to buy down interest rate maximum up to 2 points. And then additionally, I just wanted to also share another QR code that we created that has material that's really suited for realtors, educators, and home buyers. Because we are a wholesale bank, primarily our customers are banks and credit unions, and a lot of our educators out there really want to learn more about our programs. They want to be able to give tangible materials to their home buyers. So please feel free to utilize this. It lists all of our 3 programs. It has frequently asked questions and gives you more information that directs you to our website if somebody's looking for a little light reading.
Mhm.
Jennifer, you want to add anything else to the MPF part?
No, you did a great job. Thank you, Caitlin.
And just some general steps how you can participate with the Federal Home Loan Bank, learn more about these programs, How can you become a PFI in the MPF? How can you offer a down payment? Connect with your relationship manager and schedule some trainings with your lending team. We'd love to do, whether it's in person or virtual meetings. We really just want to be able to give our technical assistance and guidance on how to be successful in offering our programs. I know it's a wholesale environment, but I can say, coming from a community bank before joining the Federal Home Loan Bank, it doesn't have that feel where, as Jennifer said, you know, you have difficulty getting a hold of a person. You know, we all take pride in providing that customer service to our members. I market our programs for potential home buyers. Like I said, we have all of our materials, and you'll be able to have those. And our role, like I said, is really to educate, provide technical assistance. We have YouTube channels with all of our webinars and how to use our systems. And we provide you with marketing material. And don't ever hesitate to talk shop, mortgage shop, if you have any unique loan scenarios that you want to just, you know, run by us before reserving grant money. And that's all we have.
Caitlin, just quickly, the HCI team is having a road show, aren't you? You've got several meetings coming up where there'll be other participants of the bank, such as the relationship managers and the MPF team.
Yeah, so we have 2 in Massachusetts. We have 1 in Springfield, and that will be on, I believe, the 9th. And then we have 1 in Newton, and that is on the 30th. And if you are kind of ordering those areas, we also are doing them in all of New England. So I recommend, when you're going to our website, if you haven't received our invitation through our marketing team, go on our website, and we have a list of all of the forums, and you can register there, and you can also register in person. So we would love to meet people face to face and learn more about what you're doing.
So I would remind everyone, if you have questions, now is the time to put them into the chat. You know, we're very excited that the Federal Home Loan Bank here is with us, and the programs and Equity Builder, it's just excellent. So if you have questions on specific products, programs, now is the time. Anyone? I don't see any questions here. So I'm going to, just because Eric so nicely brought up the subject in the last conversation, have you come out with anything in regards to, or is it still too early as far as anything having to do with a NAR lawsuit and commissions and paying of the buyers, brokers, and any of that? Have you come out with anything on your end, or is it still too early?
Still too early. We have not come up with any solutions or any changes to our existing programs. The primary closing costs are ones that do not have exchanges between the buyer and the seller. But that's also a very good question, as this is a very hot topic, and we really hope that whatever pans out on this, we can try to be nimble.
Absolutely. And I just think it's fascinating, and thank you for giving those examples of how people can layer down payment assist and all of that. I'm going to ask you a question that I asked previous panels, and there are so many resources out there between federal and state and local municipalities that have down payments. Do you have any favorite resources or that you've come across that lists everything that's out there that's available?
I know that the Mass Homes does have some information, actually was
Mhm.
brought to my attention from another lender, an MMBA member, that it might be a little outdated on their website, so I
Mhm.
have a list today actually to reach out to them to let them know that we have 3 programs, and that would be the best resource that I would recommend. Jennifer, I'll put that over to you as well, because I know you have maybe some other feedback on that.
I worked for a credit union in Massachusetts and we subscribed to Down Payment Resource. And what Down Payment Resource does is they are an aggregator of all the information of all the down payment assistance programs across the country. And so you pay a subscription per state that you want to get information on. They keep the programs up to date and whether or not they have funding available. It's been a few years since I used it now, but basically your role as a lender is to approve the programs that you want to have displayed on your website. So they're the ones that you would work with. And it really is just a great way to start a conversation. I can't say that we necessarily got more business because of it, but we did get more opportunities for loan officers to speak with customers.
So I am also going to put in a plug for our program on April 23rd. We are having a down payment assistance program geared towards loan originators that is talking about some of the tools out there that some of our loan originators use when they're having those initial conversations with consumers. And we are also having a follow-up program after that that's more operational. When you have more than one down payment program that you're layering on top of it, how does that happen from an operational standpoint? So we're scheduling that one. We haven't released that date yet, but it will be sometime after the 23rd. So I see no questions. Do any of the 3 of you have any last minute thoughts before we end the program today?
I have one thing I wanted to put a plug in as well, Debbie, is that because of our membership being on a bank and credit union level, something that we're trying to do and we've begun doing in the state of Massachusetts is doing more outreach with realtor events. So we'll see some information circulating between Mass Housing and the Federal Home Loan Bank, and working with a variety of realtor associations, because we really do think that it really starts at the front. And we want to make sure that these realtors, as well as the buyers, know that these programs exist right up front, because sometimes they become a best kept secret. And then also we've been working a lot with educators throughout New England, so they're aware of the programs and they can be able to provide the tools and information on how to direct those home buyers to our programs too.
Perfect. I think you'll see more of that working together. I know
Yeah.
that we were hoping that this program would be offered in conjunction with MAR, but I think some other stuff got in the way of that took away their attention from this. So, but we hope to add to this program and invite realtors to attend this program as well. So, Jennifer, Livia, do you have any other closing thoughts?
No, just thank you for inviting us. We appreciate being here.
Well, thank you so much. And I thank HUD also for being on this. And we will be providing to everyone on this, we'll be providing presentations and a link to this portion of the program. So thank you so much, everyone, and we will see you soon.
You bet. Thank you.
Thanks.
Thank you.
Everyone.